David Morgan with you on the 4th of March, right at market open. Gold's off a couple bucks, silver's off a few pennies. Just want to make this video very quick. Jim Cramer came out yesterday after the half-point interest rate cut from the Federal Reserve, and he started pounding the table to buy gold aggressively. He said he's been saying it for a long time, that it's an asset class that you need. I'll go one step further. It's an asset class that you really should have in your portfolio at all times. I know that sounds ridiculous because markets ebb and flow, and certainly gold has had a tough time since 2011 until the last couple of years when the bottom took place. We've been in another bull market. However, Ibbotson and Associates, a study that was performed many years ago, sponsored by Nick Barisheff of Bullion Management Group in Canada, foresaw the exact relationship between interest rates and gold, and you really should have gold under the circumstances we're in. CPM Group, Jeff Christian, did a study similar from 1968 on, and the weighting of gold was actually over 20% for maximum performance in a portfolio. So gold is important. You don't have to overload, but now is probably the time, as Jim Cramer's been saying and pounding the table, with the current situation economically, financially, in the markets, and especially the fiscal economy. It's probably time to take a good hard look at the gold market. Having said that, I have one more comment. I just came back from the PDAC, the Prospector and Developers Association of Canada. Eric Sprott spoke, and he talked about the Save Canada Mining Initiative. This is basically an initiative that would make the uptick rule come back into play, which means that these Canadian stocks primarily, but the mining stocks in general, cannot be sold short on a downtick. They have to come on an uptick. And it goes through the reasons for that. You can look it up. It's out there on Investing News. Charlotte McLeod did an article on it. I'm sure you could find it on Google, but it's something to look at because he talks about basically it's an unfair advantage to the bankers and the short sellers. So the uptick rule was something that was in place to prevent what's actually taking place at this point in time. And I will be back with you periodically on updates during the middle of the week, depending on market conditions. Just a reminder, everyone should be on our free email list. Just go to themorganreport.com and sign up. You'll be given advance notice on updates or webinars or my weekly perspective that I do every week at the end of the week, and I wrap up the financial markets, and I usually include something in the gold and silver realm, so be sure to get that. And if you're so inclined, take a look at the subscribe button. You'll get a video, and you also get an outline of what we provide for our paid membership.